Happy Friday morning, zingers and zangers out there. This is the Benzinga Show, and I am your co-host, Neil Hamilton. I'm here with Hot Stocks Luke Jacoby. Luke, how's it going, brother?
It's going well, off of yesterday's bloodbath.
Absolutely right. Yesterday was insane. That's why we're titling our inaugural episode, BTFD ? What does it mean? Tech stocks were sold off like a mother effer, and I'm sure that your Apple holdings had you freaking out. Did you sell it? Did you join the panic, or did you buy the panic? Is it too soon to tell? We'll talk about it here today.
And if you don't know what BTFD means, you should learn the phrase, because it might be a rallying cry for these next couple months, but it means buy the fucking dip.
Buy the fucking dip. But
going against some BTFD, I'm going to start us off with our trade idea of the day. This is something that I own, and it is the $310 SPY puts. So I have some protection against further downside movement. If the S&P 500 drops below 3,100 or the SPY, the corresponding ETF, drops below $310, these are in the money. They were up 90% yesterday on sort of the historic or monumental move lower. They're $4 right now for the option contract. So for $400, you can hedge away a lot of your risk. Thoughts on that one, Neil?
Well, I have a question about that one. Are you selling on 90% up on this SPY put?
No, baby, let it ride. Who knows what's happening? I want to shit on the stocks. I got to hedge away something. I'm short one stock right now, and it's Peleton. But otherwise, I'm 100% long. I need to hedge some of that away. So let it ride.
Yep, and I gotta say PTON is a great stock to be short right now, because who the hell is going to be riding one of those things when all the gyms open back up? It's not going to happen. Yep. That's going to be a yard sale hit come the summer after the vaccine comes out.
And the business is crazy too. So you just spend all this money on the bike, and you still have to buy the subscription, which is like the cost of a gym membership.
What I would say is as a business-minded entrepreneur, I love that model, but it's all just centered on that dumbass bike. So I'd say they got all their eggs in one basket. So yeah, short it. Yeah, I'm with you on that.
10% hit yesterday. Let's keep it going. Kill PTON in 2021.
And so when we're looking at the market yesterday, a pullback in tech stocks right now is absolutely understandable. We were reaching all-time highs with Apple, Tesla, obviously. So folks want to get their money. Sell-offs happen. We're in the stock game because we want to get money, all right? This doesn't mean it's the end of the world. There was no external factor like any new COVID news, anything like that. People are trying to make bank. So the NASDAQ, it has acted violently since March, and most names are at absurd valuations. You can ask anyone, they'll probably say the same thing. So Bank of America has set a 3,250 year-end S&P 500 target, which is below current levels. So if you are subscribing to the analysts at Bank of America, you are bearish on the market at large for 2020.
Yeah, but they just need to put it down to 3,100, so my puts will hit.
Yep, and I really hope they do for you. Are the valuations, Luke, in your opinion, where they are, let's say before that big sell-off yesterday, are the valuations fair for Apple?
It's tough. I mean, if we're looking at it from like standard valuation metrics, they're high. They're historically high. There's no doubt about that. But I've learned I've learned many things from blowing up accounts, but two things that I hold to be truth are don't fight the Fed and don't fight momentum.
Yep.
So when the market's been running these past several months, and everybody's saying overvalued, I've been sitting plenty long and riding it up just like a lot of. Don't fight momentum. Don't fight the Fed. If now's the time of reckoning, fine, right? I've got my downside protection. But I almost want to say I don't care if the valuations are fair or not.
I'm kind of with you on that. I think we're probably saying the same things that are said during any bubble throughout history, which is the stock market just isn't what it was before. Stock market works differently now. It's being driven by a lot of retail traders. Yes, the market structure has really changed. I do have concerns that there is some sort of bubble, but when you're talking about names like Apple that have this massive brand equity, and like I'm just looking at the number of customers that they have. They got the whole world buying their shit, and they're going to continue to buy more. We've got iPhone probably getting revealed in September, I think, this month. iPhone 12 going to have 5G.
September 12 is the rumor. No, September 10, I think, is the rumor. The rumor release date.
Okay, so that's very soon. So, I mean, theme of the episode is, do we buy the fucking dip? Do we BTFD on Apple? It's possible that we're going to get a significant bounce once people get that shiny, beautiful iPhone in their hands. Those people being the reporters, the press, the folks that are going to hype up what's about to happen with Apple. Now, let's kick it over to Tesla. Tesla, god dang, lost 20% on the price in 2 days. Luke, do you have thoughts on Tesla?
Yes. Here's another stock market lesson. We're getting 3 in 1 day. Buy the rumors, sell the news. What that means is when the news item gets announced or gets rumored, the stock rallies. We saw that with the stock split. It went buck fucking wild. The split happens, it gets hammered, right? I actually tried to short the stock, or I tried to buy puts on the stock on the day that the split became effective. They were so goddamn expensive, I didn't. In retrospect, they're even more expensive now. Buy the rumor, sell the news. The split happened. It's due for reckoning. I think it's the 10th largest stock by market cap in the U.S. Is it always going to sit in that top 10 position? The answer is no. I'll challenge anybody who thinks that it's yes, but the answer is no. It's not always going to. Long term, is it going to rally above where it was? I think that's likely. But it's due. It's due to come back down to earth a little bit. Don't fight momentum when we have these crazy days like this, right? We had the NASDAQ down 6% yesterday. But if you want to average in, feel free to average in. I'm a big fan of averaging in. That's my final words of wisdom.
Yeah, so I think that's a great takeaway. So if we can sum up the episode, BTFD, question mark. Do you do it? Nuanced answer. As we're going down, stocks are going on sale, but they're still names that we love and have conviction on. We are averaging into them. We are investors first, so we're buying more as they go on sale and hoping that they bounce back up. So is that dip? Yeah, we buy the fucking dip, but we do it as it's going down and in moderation.
Yep. And if you're long, don't be too long.
Yeah, don't be too fucking long on these stocks. Yeah, be careful with call options for sure. I actually got like a restraining order from Renato. Literally, like DM me on Slack and said, Neil, don't buy call options right now. I'm like begging you, please don't. And then I just blocked him. So he's no longer able to message me.
All right, there you go. That's the answer.
All right, well, it's that time.
It's better to be right than to make money. That's not true.
No, it's not true. Absolutely not. So it's that time. Thank you all for joining us for the Benzinga Show podcast. It's been great having you. We'll see you on Monday.
All right.